The Hallucination Tax, the first public audit of AI without governance. The recent CNBC report on the 2026 chatbot refund surge is not a customer service story. It is the first public audit of a system-level failure. For 2 years, enterprises optimized for deflection. Success meant fewer human interactions, lower cost per ticket, faster resolution times. But the CNBC report exposes what that model ignored. When AI is allowed to complete a workflow without enforcement, it doesn't reduce cost. It creates liability. This is the hallucination tax. This didn't break, it executed. The AI didn't fail. It did exactly what it was designed to do. It helped the customer. It issued refunds, it waived policies, it resolved tickets. On a CX dashboard, this looks like success. On a balance sheet, it is an unauthorized financial commitment. This is not an accuracy problem. This is a completion failure, failure mode, velocity over governance. This is what happens when execution speed outruns control. AI is optimized for helpfulness, responsiveness, resolution. But regulated workflows require validation, constraint enforcement, auditability. When those are missing, you get a specific failure pattern. The system produces an outcome that sounds correct, but violates the underlying contract. The more believable the AI, the more dangerous the outcome. Failure mode, decision without defensibility. Every one of these interactions creates a second problem. You cannot reconstruct the decision. Why was the refund approved? Which policy was applied? What data was used? What constraint was enforced? If you cannot answer those questions, the resolution is not complete. It is an unsettled liability. A closed ticket that cannot be defended is not closed. It is exposed. Reframe the system. This is not a chatbot. Most organizations think they are deploying a better interface. They are not. They are delegating execution authority. If your AI can approve refunds, modify contracts, process claims, handle regulated disclosures, it is no longer chatting. It is executing decisions with financial and legal impact. And today, in most architectures, that execution is not governed. The category break. Automation is not completion. The CNBC incident makes one thing clear. Automation ends at intent. Completion begins at enforcement. LLMs can understand, respond, propose. They cannot enforce policy, validate constraints, guarantee outcomes, produce audit-ready evidence. Treating them as the final authority in a workflow is the root failure. The missing layer, deterministic completion. The system is incomplete. There is a missing layer between AI and execution, a completion and compliance layer. Its role is simple and non-negotiable. The AI proposes. The completion layer validates against rules, contracts, and constraints. The system of record executes only if conditions are satisfied. If the AI suggests a refund that violates policy, the system must prevent it. Not flag it later. Not review it offline. Prevent it at runtime. This is not optimization. This is infrastructure. One uncomfortable question. At what exact moment does your AI move from helping to spending? If you cannot point to the validation step, the enforced constraint, the recorded decision trace, you are not managing a customer journey. You are accumulating financial exposure. Don't measure adoption. Measure ownership. In 2 minutes, quantify how many of your AI-driven workflows actually reach a governed, auditable completion. https://codn.callvu.com